Welcome to Capital Currents, where the flow of business news and market trends keeps you ahead of the tide. I'm your watchdog, and today is Thursday, July 31st. In today's episode, I'll get you ready for a big Fed meeting and tell you when investors are expecting a rate cut. Then, I'll tell you about a big acquisition in the cybersecurity space. Finally, let's do a check-in on Starbucks and their turnaround plan. Well, after 6 straight days of gains, the markets finally hit a speed bump yesterday with the S P and Nasdaq both dropping about 0.3%. Now looking forward to today, we have a lot of stuff going on. First up is the Fed meeting. The Fed wrapped up yesterday afternoon, and just like all the Fed meetings this year, no rate cuts are expected. One reason the Fed has been waiting to cut rates is because of tariffs. They're worried that tariffs could reignite inflation, and they don't want to cut rates to make the situation worse. But according to all the recent data, tariffs haven't had a meaningful impact on inflation just yet. And with all the trade deals being announced and the trade picture coming into clarity, it could set the table for a September rate cut. But that's not the only thing I'm paying attention to. We have earnings from Microsoft and Meta. I'll actually cover those in tomorrow's episode because there's just too much to talk about today. Let's run through some headlines, starting with the big acquisition in the cybersecurity space. Palo Alto Networks is acquiring the Israeli identity security firm CyberArk in a $25 billion deal. CyberArk is one of the leading companies in what's called privileged access management. They help secure sensitive information and serve as a gatekeeper for who can access certain data inside the company. They're basically like a digital bouncer for the enterprise. And this deal will give CyberArk shareholders $45 a share, which is a 26% premium from Friday's close. This is the second major M&A deal in the cybersecurity space. Google made headlines back in March with a $32 billion purchase of Wiz, and now you have Palo Alto making this move. I think these companies are betting that cybersecurity is going to become even more crucial as cyber attacks increase in the age of AI. In fact, Palo Alto CEO Nikesh Arora called this a strategic play to solve the upcoming problem with agentic AI. And he said that CyberArk's tools are crucial for the next wave of cyber defense. Now, what's funny is that Wall Street isn't quite loving this deal for Palo Alto. Their shares are down 8% this morning, but some analysts on Wall Street, like Dan Ives, are calling this a home run deal. He says that this could spark a fresh wave of consolidation across the cybersecurity space. He called out names like Zscaler, CrowdStrike, and Checkpoint potentially next on the M&A dance card. So yeah, cybersecurity seems to be hot right now, and it's definitely a sector to keep an eye on over the next few months. Let's shift gears and talk about Starbucks. Starbucks just reported earnings, and things are still kind of lukewarm over there. The company's sales and profits both came in below expectations in Q2, with comparable sales dropping 2% and profits coming in 50 cents a share, which was much worse than the 65 cents a share that Wall Street was expecting. Starbucks has now reported a drop in same-store sales for 6 quarters in a row. Not a good streak. The company has been in full turnaround mode since bringing on new superstar CEO Brian Niccol, who, by the way, was previously running Chipotle and helped turn that company around. And he's trying to do the same at Starbucks, and Starbucks has been revamping their stores to cut wait times and, in his words, bring the warmth and human connection that defined Starbucks back in the day. So Brian Niccol is closing down those mobile-only stores, and he said new Starbucks stores will be an actual place to sit and drink your overpriced latte. Starbucks is planning on spending $500 million to increase staffing at U.S.-operated stores. It's a good start, but none of these changes that they're trying to implement have actually impacted the numbers yet. In the earnings call, Brian Niccol promised to unleash a wave of innovation in 2026. I don't know what that means, but investors were eating that up because Starbucks stock is up more than 5% this morning. The company also had some positive news coming out of China, which is Starbucks' second biggest market. They saw sales jump 2%, which is the first time they've ever seen positive growth since Q1 of 2024. And the company attributes that turnaround to cutting prices and offering more sugar-free options. So The turnaround plan is still brewing. The numbers haven't fully bounced back yet, but investors are giving Brian Niccol time to cook. That's all the business headlines I have for you. Let's take a look at some stocks making moves. Harley-Davidson shares are revving higher this morning after reports that the motorcycle manufacturer is looking to offload their financing business in a deal worth $5 billion. According to Bloomberg, Harley is in talks with private equity giant KKR and Pacific Investment Management to sell off its loan portfolio and motorcycle financing arm. The financing unit makes up 20% of Harley's total revenue and provides loans to Harley dealers to help them buy inventory and to customers for motorcycle purchases. This is coming at a time when Harley's core business is struggling. The company just dropped its Q2 earnings this morning, and they missed on profits and they declined to provide annual guidance. On top of that, the revenue was down a whopping 19% as demand for motorcycles continued to slide and tariffs added more pressure. Harley is struggling to sell motorcycles, but they're able to make a solid exit on their financing side, which had investors excited, and shares are up more than 20%. On the flip side, Mondelez, the company behind Oreos and Chips Ahoy, is seeing their stock drop more than 5% this morning after the company reported a 3% drop in North American sales. Mondelez is blaming the pullback on consumer anxiety over the economy and higher prices. Mondelez had to hike prices earlier this year in response to cocoa hitting all-time highs. The supply of cocoa has since improved, but those higher cocoa costs are starting to hit Mondelez's bottom line, and the company reiterated that it expects a 10% drop in earnings this year because of cocoa supply disruption. The company is hoping that a new collaboration with Hershey's can sweeten things up this fall by launching Reese's flavored Oreos soon. That's all for today's show. Keep navigating those waters and see you tomorrow.